Good morning, everyone. Anyone get an email today? Hey, Ken. Cyrus, good morning. Michelle, Jaquez, Shannon, Anil, Arturo's here. David. All right, Sylvia, Robert. They got the email. That's good. 11:39. Perfect. Mm-hmm. Yeah. All right. Say hello to everybody. Good morning, everybody. Matt, I'm going to have to put YouTube on this screen since that one's not working today. Hope everybody's doing great today. Can't believe it's Monday. We only have 18 people on YouTube. What's going on here? I think people come in late to YouTube. Hey, Darren. Hey, Federico. Hey, Eduardo. Good afternoon to everybody. Let me say hello to everybody. We got Petro, Cyrus, Peter, Zoom user, Robert, Carl, Petro, Angie, Ken, Brian, David, Debbie, Daniel. Hello there. Yay! Daniel got lifetime for True Trend. Yeah, folks, I don't usually do these discounts much in the year. I'm trying to get you guys up on speed, trying to give you some discounts. That's why I'm doing all these sales on December and January. I have a really fantastic learning class that I'm scheduled for today for you guys here. A little surprise. This wouldn't have been a somber day if it weren't for your advice. So far, all trades positive. Thanks for the pit trade. You're welcome. By the way, did anybody else take the pit trade? The ANF? I gave you that trade while I was doing a class. I was multitasking. Polly, I saw that. I saw that. You guys see it? ANF. Nice. If you missed my entry and got into it later and then just ignored my exit and got out of it later too, you still would have made money. It was hard not to make money on that trade. Still in ANF. Okay. Good. Totally missed it. Well, you guys missed a nice quick little punchy profit on a Monday. But anyways, we're here now. I'm going to give the room a few more minutes to fill up. It's pretty light today. Can you make sure everything went out, Matt?
Yeah, the email went out.
The email did go out? Okay. All right. EIX up 186%. Good, Scott. Still in ANF. Good, good. Make sure you get all those, Matt. I did give you ENX on Friday or last week, didn't I? Let me get my TC 2000 turned on here and we can begin. Remember Edison, EIX? I think I might have given it to everybody here too. Tow your car. Oh, sorry, Ken. So sorry to hear that. Hey, look at the bright side. At least you can stay here with friends while you're waiting for your car to be picked up. All right. There's my TC 2000. Here we go. It's pretty fast, Matt, with the four screens. Four screens, it's working. Okay. All right, here we go. Let me share my screen. Now it's number 4, not number 6, but it is what it is. It rules. It does, Alan. It's a great program. Just towed off out of sliding driveway. Okay. I want to get at least 300 people here We got now 40 in the YouTube. Let's see how many you got here. I want to make this worthwhile. 265. We'll have 300 in just a few minutes. It's only 12:04. Marty says, great put trade today in the pit. You're welcome, Marty. I try. Remember this stock, FINMA? Who gave you this stock and told you to buy this stock when it was right here? Anybody remember? Anybody take me up on it? Good morning, Stephen. Looks like folks are getting in a little later today than usual, Matt, you know? Carlos did. Good. Anybody else? Anybody else got on this one? FINMA? Could have made a lot of money on this stock. Got in right here. Carlos, David, Claire. Good. Been in and out of FINRA 2 times since then. First time Thomas. Hey, Thomas. Welcome, Thomas. Chris bought 100 shares. All right. So I'll start my analysis and I wanted to teach you guys something today, and I will, but I'll wait for the room to fill up a little more. I wanted to have a session. What was the EIX from the webinar? I didn't see it here until profits were made. It wasn't here. It was from the pit, and I think I might have given it in the VIP room. When the fires started, I said that in California, in Los Angeles, Edison is the utility company. And I told you guys right over here to sell it. It pays to be in my programs. And DWP, yep. Gave it to you right here. Let me see where I gave it to you. Hold on. Let me take a look and see if I gave it to you in the regular members area. EIX. Yeah, I did. Right here. Last week. I hate to take advantage of bad times, but that's what traders do. Take a look at EIX. That's from the pit. Yeah, it was forwarded from the pit. And on the pit, hold on. See? EIX. Right here. It was on January 8th. What's today's date, guys?
The 13th.
January 8th at 1:22 p.m. You think you had plenty of time? It was 5 days ago. I hate to take advantage of bad times, but that's what traders do. Take a look at EIX. It's the biggest utility company in Southern California. Wildfires and utilities don't mix. I think I've said it in right there. Just wanted to throw it down your way. All it did was go from 80 to about 57. That's all. Anyways, it pays to be in the pit. All right, let's see how many people we got in here now. We got 305. All right, so let's start with the SPY, and then I want to give you guys a lesson. I'm going to give you a lesson that you won't forget for a long time. The SPY broke the 100-day moving average. There's now less than 50% of stocks trading above the 200-day moving average, which means we're officially in a bear market. I won't tell anyone that. It'll just be our little secret. But here. Let me show you. I know a lot of you are very visual. I've only been talking about this every single morning now for the last month and a half. 45% of stocks. These are all stocks above $2 that have been trading for a minimum of 6 months. 45%. Well, Roger, we don't look at that. We look at the S&P 500. Okay, well, we're at 51%. So this morning, we were at 49%. Not too morbid, will benefit from wildfires. I didn't think about that, but anyways, Russell 1000, look at this. 50%, 42, 46. This is 3,000 of the biggest stocks, 46%. Very bad. Very, very. Oh, Darren made over $5,000 on EIX. Go ahead and grab that, Matt, from YouTube. Nice. I love that. Love it, love it, love it, love it. You got to take action when Uncle Roger tells you stuff's going on. Yeah, this is bad. Look at NASDAQ, 52%. So momentum levels are not good right now. Now, Does anybody not understand why I have been telling you guys not to go long and I have been really slow to give long alerts over the last couple of weeks? Does anybody not understand? Good day, Jack. Does anybody not understand? Does anybody need an explanation or is this enough? You understand that most stocks are very highly correlated to the S&P 500. Matter of fact, right now, these are the only stocks trading above the 50-day moving average with volume. There's always something here, and I can't find anything today. This is it. Usually this is very long. This is it. And most of these are natural gas stocks. Anyways, you have to be on premium to see cute colored momentum rectangles. I don't know. I think so. I think so, Jeffrey, but I'm not sure. Anyways, momentum is bad right now. In terms of what's leading right now, let's look at the week's performance. Gotta go this way. Yeah. Real estate, the Dow, blue chips are leading right now. They're not doing all that great. But as far as selling off, look at selling pressure on technology. SMH, utilities, QQQ, not good, not good at all. But this is the relative strength of all the indexes right now. You can see these are the blue chips. Got a little, the more yellow it has and the more red it has, the more speculative it is. You can see everything right here. Bitcoin is at the bottom, not looking all that good. So please, next time, I know we went long, Stealth Surge, but we went an energy stock. We have very strong seasonality for energies. And while this is going down, what are energies doing, Peter? What are energies doing? They're not doing the same thing as the market, are they? Okay. Just want to make sure we're all on the same page. Is SMH a put due to seasonality? No, it has to do with the fact that SMH is going down, but I don't have a put on SMH. I don't have anything on SMH. I did tell people around here not to do anything until we hit 265, which is right here. By the way, have you noticed my candles are white? See green and red, but they're white. Hey, Moondog. Have you noticed that? That's when volume is above the 50-day moving average. I made a little change that there. No, not winter colors. Volume is above average volume. Because I want to see what price did when volume was above average. When it goes above this line, if it's above this yellow line, it's highlighted in white. Okay? Because we want to see not what random bars did with low volume. We want to see what high bars did. How do you set it up, Dave, in TC2000? It's very difficult. Very, 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 very difficult. You press the right button. You go to your chart properties. I mean, wait a minute. Hold on. Yeah. You go to your right here. Edit chart properties. You go to edit plots. Oh, what's going on here? Oh, right here. You go to price styles. See, it says add color. You put volume above 50-day moving average as one of the conditions. Right here. You go to add color. You go to pre-built. You go to volume above average. It's already set to 50. And you're good to go. Very difficult. Very, very difficult. So yeah, I'm joking. It's very easy. Please let me know when you let the trades loose. Anil. Okay, Anil. Whatever you say. I have not seen any energy stocks, alerts, and Stealth Surge.
It was in the webinar.
Yeah, the webinar we just did. I didn't place it in Stealth Surge. I placed it in the webinar. Peter's confusing the trade that we put for free on a webinar with a Stealth Surge trade. That's all. Don't make those confusions, Peter, because you're going to confuse everybody else. What charts do you use? I use Hakinashis. No, I don't. Hakinashis are down here. I use regular candlesticks. I just highlighted high volume candles. I highlighted high volume candle. Okay. So not good. The market's not looking pretty right now. I can give you a million different ways of analyzing it, but I'm just going to tell you it's looking pretty bad right now. QQQ is almost at the 100-day moving average. The SPY broke the 100-day moving average. The Dow is below the 100-day moving average, almost at the 200, and IWM is at the 200, flirting with disaster. This is what a bear market looks like, folks. I don't even know what you're talking. I don't know what RC 2000 is, Jeffrey. Are you going out of your way to confuse me? Because if you are, you're doing a fantastic job. Okay, now I wanted to give you guys a little lesson today. This is a great time to put everything away. This is a great time to think, to forget about, to put all your ego away, to forget everything you've learned in the last 20 years, and just let me do my thing and not interrupt me. Trust me, it's for the best. So let's see. Let me give you a good. Okay, here we go. Okay. Let's take this price action. Let me go to bar chart. Teach you guys something that you'll never forget. Well, no, you'll probably forget it tomorrow, but I'm hoping that you won't forget it. Bar chart. Now, this lesson was so important that I asked one of our copywriters to come in here and take notes. It's the first time this year and last year that I've asked him to do that. I think I've asked him maybe twice a year to do that. Okay. We're going to focus on one area. We're only going to focus on this and this. Okay. I'm glad to hear that, Gaston. Everything that happened before this bar never happened. All of these lines, they don't mean anything for the purpose of our example right now. So everything that happened before here never happened, and none of these lines matter. All we're looking at is this price action right here. Okay? Adam, this is a real good one. You will definitely want to watch a replay of this. I don't even promise you. I guarantee you. Okay? Good luck. All right? Good luck, Adam. So just focus on this price action. If you start asking me about these lines, I'm not going to answer. If you ask me about this, I don't care. We just care about this. I couldn't care if I'm looking at IWM or Marie Calendar right now. It doesn't make any difference. I'm just trying to teach you about price action, and I happen to have pondered upon this example, which shows a good example. So let me see something. Let me even make it easier for you. There we go. Okay. Perfect. Ah, there we go. There we go. Okay. Don't get now. I'm not going to try to trick you. And I don't want you to be creative. I just want you to pay attention. What's happening here? What's happening here versus what's happening here? What's happening here? What's happening here versus what's happening here? Can anybody tell me? Here we're consolidating and here we're selling, right? Here we're choppy and here we're directional, right? Okay, perfect. So far, so good. Maybe we'll make this. Okay. So very choppy, right? Very choppy. Down, right? Okay. So answer this question for me. What happened here between buyers and sellers, and what happened here between buyers and sellers? Let's see how smart you guys are. Simple question. What happened here between buyers and sellers, and what happened here between buyers and sellers? Can anybody explain that to me? No, forget about volume. Forget about any of that stuff. Simple. Don't have to get, there's no volume here. If you don't see any volume here, why are we talking about volume? It's nothing to do with volume. Okay, more sellers won out. Okay, the more complicated you guys are going to get here, and the more you're going to try to out trick me, the worse and further off you're going to be. That's all I'm going to tell you. I want you to have an aha moment. I'm not trying to trick you here. See, Vivek's already confused. It's pump and dumped. I don't know. Sellers winning. What is happening here and what's happening here? We have sideways trading action. Here we have directional trading action. That's it, right? So far. More sellers than buyers. Kathy, let me ask you a question. Kathy's onto something. Kathy says more sellers than buyers. Kathy, where do we have more sellers than buyers? It's a good time for you guys to stop typing right now. Where do we have more sellers than buyers? When we break support. So let's just say and again, I'm not trying to trick you here. Let's just say we break support right here, right? Fair enough. Let's just draw this line. Let's just draw this line. Okay, is that reasonable? Fairly reasonable. So right here, right? And I'm not trying to trick you. When we break support, we broke support right here. So far, so good. Was everybody say we? Now listen to what Kathy just says. We have more sellers than buyers when we broke support. Nothing wrong with that. What if I tell you that Kathy is wrong? What do you mean Kathy's wrong? It's obvious. We had consolidation. We went lower. We broke down here. We had more sellers than buyers. Duh. It's obvious, right? Right? Well, Kathy's right about one thing. We had more sellers than buyers, but let me show you something interesting that most of you don't realize. Kathy says this is where we started having more sellers than buyers. Right? Right, Kathy? And I'm not changing anything you're just saying. I knew you were going to say that. Not Kathy, but I knew you guys were going to say here. Right? Here we consolidated. We have an equal amount. And don't get into the weeds. Just stick up. Make this like 30,000 feet from the ground. Trust me, I'm going somewhere here. I'm going so far that you guys don't even know where. Trust me, you have no idea where I'm going here. Just follow along. And you too, Matt, follow along. We have equilibrium here, and here we have more sellers than buyers. I mean, duh. I mean, I've been teaching you guys that for years now, right? I mean, everybody would say that, right? What if I told you that's wrong? What if I told you that there was actually more sellers than buyers here, and once the sellers realized that, they discounted the price? I'm going to say that again. I'm explaining it to you, Jack. If you would just pay attention and listen, you would hear me. What if I told you that what we just described is not true? What Kathy's saying is the more sellers than buyers came in right here. Came in right here. Trust me, I'm going somewhere with this. This is where you started having a non-equilibrium between sellers and buyers. And what I'm saying, that's not true. I'm saying that by the time we got here, the sellers already knew we had less buyers than sellers, and they discounted the price to bring more sellers in. So what if the actual decision process of whether there's more sellers or buyers was not decided here? What if it was decided right here? Right here. Right here. And this is just a conclusion. What does that mean? What? Now, hold on. Think about this for a second. What if, as we're going through this, buyers and sellers are duking it out, and the sellers who are in control, obviously, are saying, wait a minute. There's less buyers coming in. Let's bring some more buyers coming in. Let's take the price down. Some more buyers come in. When did the seller decide? When did the seller decide that he was going to mark down? And I hope to God you're writing down what I'm about to tell you right now. When did the seller decide he wants to mark down the price on the auction? Mark down the price. Marked down the price. Marking down the price. Now, you should have one thing on your paper right now, and it should say marking down the price. I'm doing well, Art. I'm doing well. I'm hoping that people will understand the most important thing I'm going to teach them today. Oh, Omar said something very, very important. When momentum started decreasing. Let me ask you a question, Omar. Did momentum start decreasing here or over here? You should have two things on your piece of paper. Momentum decreasing, marking down price. So, Kathy, what if I told you that the decision by the sellers to mark down the price didn't happen here? It happened here. Wait a minute. Wait a minute. You're telling me that the sellers knew right here during this period that they were going to take this market lower? Mm-hmm. Yep. They didn't, nothing sold here. They marked down the price to bring in more buyers. You know when you go to a mall and you put something at a price of $10 and it can't sell, and they are like, okay, we can't sell it for $5. We're going to mark down the price for $5. This is marking down the price. Marking down the price. Is marking down the price sound like marking down the price sound like a challenge between buyers and sellers to you? Trust me, I'm going somewhere with this. And some of you are already starting to see a little bit of it and getting a little excited, but most of you still have no clue where I'm going with this. Sounds scripted. There's nothing scripted about this, Randy. Kathy's asking an amazing question. I would like to know how you know that. Great question. What momentum level is the threshold? We're no okay, but marking down the price has to end at some point. It does. It does. It ends when buyers come back in. Angie and Kathy are asking the best questions here. They're asking good questions, and Omar almost has it part of it figured out. If I can tell here if buyers or sellers are going to mark up the price or mark down the price, then should I be looking at a breakout, or should I be looking for something here? Could the garbage trading action here possibly tell us if buyers or sellers over here are going to mark the price up or down? Gee, I wonder, have I got your interest? Have I piqued your interest? Now, I said something very, very interesting so far. I've used the word marking the price down. What does that really mean, marking the price down? Doesn't sound like hardcore selling to me. It just sounds like they made a decision during this process to mark the price down so they can create more, so more buyers can come here and nibble at it. Inducing buyers. They're not, it's not coming here because sellers are because sellers right here, there's more sellers than buyers here. It's here because the sellers decided to mark the price down. It was decided right here. And if anybody thinks it was decided right here, you're wrong. Isn't that interesting, Kathy? Isn't it interesting how we always assumed it all happens right here? But what if I told you that it happened right here? Now, some of you are starting to almost ask the right question. Thibault, I'm not talking about relative strength, my friend. The word relative strength have not come out of my mouth here. I'm trying to teach you guys something really important. I'm going to give you the answer at the end after you've exhausted every possible guess and every opportunity so that I could see that you're actually focused and your mind is spinning, and then I'll reward you by giving you the answer, but not till then. I can be an ass sometimes like that, yes. why it happened there. And Nil, it doesn't matter why it happened here. But what is important is that what you think happens here actually happened here. So if it happened here, and if the sellers know before it gets here that they're going to mark down the price, shouldn't you be asking, what the hell should we be looking at here to help us determine that, Roger? Because they're just marking the price down. It's not because a huge sell order came in here. They just marked the price down. And if there was more buyers here, they would mark the price up. No one decided to take any profits. Stop. Just you forget everything you know. Just forget everything you know, because I'm obviously teaching you something you have no concept of right now. Stop talking relative strength. Stop talking trading stuff. I'm not. The word markdown, does that sound like a trading talk to you? The sellers marked the price down. Market makers decided right here that they were going to mark the price down. The only thing you should be asking yourself is, Roger, are you telling us that they decided to lower the price while we were going through here? And if they did, you better teach us how they did it, because we're dying to know. Tell me, does anything else matter? I just want to know, does anything else matter? So we've discovered now something that you never knew before. We've discovered that the process that happens here dictates whether sellers or buyers are going to mark the price down or mark the price up. So if this is where they decide, then the next question is, what is it that they're looking at here that's going to make them decide if this is going to be here or here? If you're not deciding it at this second right here, but you're deciding it right here, what is it that's going to make us decide this? The $1 million, actually, the $1 trillion question is, what's happening right here that's going to tell the seller or the buyer what's going to, basically, do you want to, here's where I'm proposing. Do you guys want to wait till we're down here to figure out if we're going to be selling off, or do you want to know about it right here? Let's see the answer to that question. Let's see. Okay. Right here, right? Don't you want to know what's going to happen, if this is going to happen here versus here? Now, considering that up till this moment in time, and the entire time you've been trading, you've always thought what Kathy did, that the sellers gain control here. And today, for the first time ever, someone completely moved the cheese for you and told you, no, 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 no. No one decides when that happens. Remember, the sellers don't have to move the price lower. They can keep selling it here if they want. They made a conscious decision to mark down the price right around this area. We're not changing the facts. And marking down is very different than forcing sellers overpowering buyers. Marking down sounds just like a voluntary decision to do something based on the knowledge that we gleaned through here. So my question to you is, do you want to decide right here, or do you want to decide right here? Since you've learned now, since that decision by the sellers doesn't happen here, do you want to be in the same camp as the people who are marking it down, or do you want to learn by surprise? Earlier. Mark keeps talking. I keep saying this has nothing to do with trading, and he keeps talking about engulfing candles, shakeouts, stagnation of momentum. Do you hear me using any of these words? Scott's talking about VWAPs. Man, I got you guys exactly where I want you. Everybody thinks they know, but nobody really knows. Yes, Bob, a new way to think earlier. What? You mean you have a way to tell us if the market's going to break out or down ahead of time? No. Matt, do you think we've got their attention?
Yeah, you got
Don't you
mine.
like it when I tease them to death and then tie it up, put it in a nice bow tie, and then send them home on their way?
Yeah, I'm waiting for it.
I know you are.
I'm not following you either.
I know you're not following me. You're not supposed to follow me. If you were following me, then we would have a big problem. So I know you're lost. I know. No, the crystal ball doesn't come in. And if anybody starts talking trading talk, I'm going to kick you out of here. Stop it. Just stop it. You don't know. Admit defeat. You're done. But I gave you a good clue. One thing you did learn. You learned something very important right now. And if we left it there, and if we left it right here, right where we are right now, then you've learned that the decision of whether the market's going lower or higher isn't made right here. This is a conclusion. The decision is made right here. So the question you all should be asking is, what is it about this that gave this away? Tell me I'm wrong. Stop it. Stop it. Just stop it. Stop it. The only thing that matters is what happened here, not here. What happened here that's going to tell us about what's happening here? Wild Ranger says that's exactly what I want to learn. I would hope so, right? Well, think about it. If you just learned that the decision of whether it's selling pressure is coming in happens way before that the selling pressure actually happens, then what is it that's causing the sellers to mark down their price? Too much inventory accumulated. Yes, David. And how do we know too much inventory is accumulated right here? Finally, somebody speaking my language. See, you all have this, you all know too much about the markets. I don't know anything about it. I just know about auctions. And I know that when somebody marks something down, it's usually because of what David just said. And David just said, you guys are too fancy for me. I don't understand all of this fancy trade talk. Too much inventory accumulated. When was too much inventory accumulated? Price of the 19th didn't reach 60%. Wait, I don't even understand what you're talking about. Market makers were unable to sell off their inventory. Wow. Folks, I don't know if you realize this or not, but we're talking about an auction. You want to talk about 60%, Fibonacci, all that crap. I'm not talking about any of that. Green bars bigger than red bars. I don't even know what that means right now. Remember, I told you this has nothing to do with anything we've learned before. But you've learned something really important just now. You learned that selling pressure they don't decide right here. Now, I thought by now you'd be like, wow, that's like the most important thing I've learned. And it makes perfect sense, right? That they just marking prices down here because they couldn't sell their inventory. I'm going to ask you again, what has to happen here? I'm being very general right now. What has to happen here? How do you know when they have too much inventory? Oh my God, Matt. Can you imagine? Amazing. I'm actually having people who have good questions. So how can I tell? So we're making progress. We're making progress. Yes, this is the most important thing you will learn. And I hope you understand how important this is. What can this garbage trading action tell us about happening here? Well, if the sellers figured out during this period of time that there's too much unsold inventory and they need to take the price lower, this is a conclusion. They didn't make this decision here. This is a conclusion. If this is a conclusion, then the decision has to be made here. So the only thing I care about is what possibly could have been, what could they have possibly seen here that you and I can't see? What is it that happened here that we can't see that would have caused that to happen? Isn't that the only thing that matters? It's not level 2. It's not call to put skew. It's not any of that stuff. Now, we can't rely on price, right? No, not sell options. You guys are way too educated for me. See, I've only been doing this for 3 days. And I've only been at 3 auctions, and I've never traded stocks before. And I'm trying to explain to you that's the level you need here. But you all keep trying to instill your knowledge, and it's not going to help you here. I'm teaching you a new concept, brand new concept. You've never learned this before. Nobody's taught this to you before. Just say, please give up. Uncle, we're done. Okay. So let's just make an assumption. I'm going to make the example even harder for you. Let's all assume that every price bar looks exactly like this here, from here on out. Price is just sitting here. sitting here, sitting here, sitting here, not doing anything. Somebody gave the answer in the beginning. In the beginning, the answer was momentum. We look at momentum here. Momentum. Momentum. We can't look at price because price is doing nothing. We have to look at momentum. Momentum. How would you look at momentum? What is momentum? Does anybody know? So you've learned a few things so far. You've learned that this is a conclusion that was decided right here. Now, you're probably saying to yourself, shit, if I could figure out during this process what's going to happen next, and then if I can do that and then add all that to the tools that Roger's using now, I'm going to be printing money. So Roger's telling you, yes, you're right so far, but this is a conclusion, and price didn't go anywhere here, so you can't look at price, but you can look at momentum. But most of you don't know what momentum is. So now let's talk about trading. Does anybody know what momentum is? Omar, be very careful when you say yes. What is momentum? Now, if you all say no, I don't understand, this will go much faster than when you guys try to guess. It'll go much faster if you just say no.
Do I get to guess?
No, you don't get to guess because you're starting to understand what I'm talking about.
Yeah, I know now.
Yeah, I know you do. Now you do. Pretty cool class, huh, Matt?
Yeah. You had me fooled.
I know I did. If they can only understand this next concept, right? They can only understand this next concept.
It's a good one.
Yeah, I know it's a good one. I had a lot of weekends time to think about it. All right. So it would be much easier for me to show you this if all the bars were doing pretty much, if they were all equal place. But I'm going to tell you what momentum is because no, hold on. Short wicks, momentum is strong. Quantum motion moving body measures the product. Momentum, rate of change in stick price. We're getting close. How quick price moves in one direction? No, it has nothing to do with price moving. Man, you guys really don't know. Think about it. You've been trading now, some of you, for years, and you really don't know what momentum is. People are hating me right now, Matt. They're like, this guy, he just wants to. Well, after this session, you'll never forget it. So let's assume now, let's make an example, and let's say that every one of these candles here is 218 to 220. Let's just make an assumption that all the price action leading to this, just to make it even more complicated, let's assume all price action is right here, so that all of these bars look exactly the same. The speed of the direction, interesting. Directional bias, interesting. None of you know what momentum is. Can we give it up so I can continue, or do you want to continue? This just shows me how much we really need to focus on the basics here. The speed of price change. Thank you, Carlos. Thank you. Carlos is going to be really busy with his notepad the next couple of days. I could see that. You know what's interesting? Ken is a post-PhD in math, and I haven't seen him say anything here. But you guys all think you have it figured out. So this is the high. Look at this bar right here. Imagine every bar, the high of every bar is 222.34, and the low of every bar is 219. Every bar from this point on till here has the exact same high and the same low. So price isn't moving anywhere. Wait a minute. You're telling me price is not moving anywhere, and you can tell if this is going to go up or down? Do you see volume anywhere here, Cyrus? Do you see volume anywhere? Am I talking ATR? All right. Every time you guys interrupt, I'm going to start in the beginning. You was watching you missed out a good one, Ken. So we learned so far that whether price breaks down here is not determined at this moment, as all of you thought. It was actually determined right here. So what happened right here that made us realize that buyers, way before it happened, whether sellers were going to mark down their price. And we already know why it happened, because they had too much inventory. And they decided they had too much inventory, not right here where Kathy said they would. That was a trap. I knew you were going to say that, Kathy, because that a breakdown, right? Breakdown, all the stuff we know. It actually happens right here. And if you think about it, and if you forget everything you know about trading, and if you think about the auction, which is what it is, it makes sense. They just marked their price down here. I wouldn't be surprised if there was hardly any selling between this bar and this bar. They just marked down the price. Oh, we didn't get the reaction we wanted here. We're going to mark down the price. So the only thing that matters now is, what is it that the sellers saw here that you can replicate by yourself that would tell you right here what will happen here or here? Price highs and lows. David, I just said all the prices have exactly the same highs and lows. I said every price going from here to here has the same high and the same low, making it a little more difficult for you now. Okay. We stopped making higher. Yeah, we stopped making higher highs all the way here. The last 20 bars, we haven't seen a higher high or a lower high. We've seen the same high and the same lows. Thank you, Wild Ranger. What you're going to look at, the highs and lows are in the same spot. What you're going to look at is the relationship of where the bar closed in relationship to the highs and the lows. And the lower the low goes, the lower the closing price gets on the bars, the lower momentum levels are getting. Momentum has nothing to do with price. Momentum has nothing to do with price. I already told you the highs and lows here are equal. The only thing that's shifting is where the price closed and compared to the highs and the lows. So if during this range right here, the closing price of the bars kept going lower and lower and lower, even though the highs and the lows were exactly at the same spot, momentum would turn very negative, and by the time we would get here, it would just be a conclusion that the sellers need to take price lower. Would technical analysis show you that? Would volume show you that? No. Would price action show you that? No. No. But at least you've learned two things. You've learned the true understanding of momentum. Momentum is when you have a piece of energy that's pent up and the closing price, not the high and the low, the closing price is getting higher or the closing price is getting lower. So let's say you have 20 days, and each of those days the price is between 20 and 19. 20 and the highest 20 and the lowest 19. But the closing price is going lower every day. It starts closing near the high, near 20, but it keeps going down, and now it's closing near 19. That's called pent-up momentum. And as momentum gets weaker, price follows. Price follows momentum. Whether price is marked down or not is not determined here. It's determined right here by whether momentum levels are increasing or decreasing, and it has nothing to do with price. Well, Roger, thank you for teaching me that, but how am I going to measure that? That's the indicator that Matt and I are working on right now. Now, let me give you a little taste. What if I can tell if momentum is getting better or weaker on 3 different time frames at the same time? And on all those time frames, momentum is increasing or momentum is decreasing. That's how you know if institutions are going to buy or going to sell before it happens, not while it's happening. Okay? That's called fractal convergence. Yes, that's called fractal convergence. Thank you, Ken. So, in every example, 20 price bars, the high was 20, the low was 19. But this little bar right here keeps moving and it keeps getting higher or lower. Now, I'm going to add up one more wrinkle to this story. What is a momentum indicator? Man, folks here know very, very little, Matt. What is a momentum indicator? Since I told you you need momentum here, what is a momentum indicator? I'm not going to tell you that yet, Paulie. Nothing to do with ATR. Yeah, ATR is close, but not quite. Yeah, not quite. Time, price, the wicks. People are just guessing. MACD. Oh, yeah, definitely MACD. The relationship between momentum indicator. Well, okay, let me ask you this question backwards. Let's see how smart you guys are. What's an oscillator? What's an oscillator? What is an oscillator? What is an oscillator? Not a wave maker. What's an oscillator? An oscillator is a momentum indicator with divergence. What happens if you take a divergence out of a momentum indicator? What happens if you take divergence out of a momentum indicator? You've got yourself something really, really cool. Has anyone created something like that yet? No. But guess what? Now, I'm going to put everything together with you and put tie it in a bow tie and wrap it up for you and send you on your way. Now, my suggestion is that you watch this class 20 times, 15 to 20 times. You may start getting it now. Whether price goes up or down after it's been consolidated is not decided while it's going up or down. It's decided during the consolidation. How is price decided during a consolidation? Whether it's going to happen in the future, by whether momentum levels are declining or increasing. Those momentum levels are not measured by whether price is moving. It's decided by whether market internals are getting stronger or weaker. It has nothing to do with price. Okay? How do you measure that? You create a custom-built momentum oscillator that doesn't take divergence into account because divergence messes them all up, which is another reason why I don't use divergence very much. I just only gave you 31 years, something that took me 31 years to figure out. That's all. Did I get the wheels spinning in your head a little bit? Did I put a little bit of doubt about how you thought the market works? Because everybody thought for some reason that this is when it's decided if the market's going to go down or up. No. No, market makers decided it right here, long before it happened. Have you ever heard of anything like this before? I know, Jack. I know. It'll look, it only took me 31 years. I told you, rewatch this video 15 to 20 times. Whether price, momentum dictates whether buyers or sellers mark price up in an auction or mark price down. Momentum cannot be measured by looking at price. Momentum can only be measured by looking at a momentum indicator that doesn't have divergence into account. Unfortunately, there's nothing like that exists. So Uncle Roger decided to make one for you. To get the most effect out of it, you use it on multiple time frames, and it'll tell you what institutions are doing and what they're planning on doing and what they're not planning on doing from your perspective. When I came out with the Pro Trader dashboard, I created a tool that allowed you to see relative strength in real time, which is one of the biggest edges that you can get when you're trading. Now, I'm going to come out with a tool that allows you to see momentum in real time. So if you have momentum and relative strength, you're going to have both edges that Wall Street that you need to be able to tell what is happening during periods of consolidation when there isn't any relative strength to help you, because you can't decide relative strength in consolidation. Sylvia says mind blowing. It is mind blowing. Like I said, it only took me 31 years to figure it out. Yes, I've been holding back on you. Yes, I have. I have. So the first thing you should be having an aha moment right now, an epiphany about, is the fact that you thought till now, because every guru in the world told you, is breakdown. We're going to figure out what's going to happen right here. No, it happens right here. You just don't know about it because you're not looking at it from the same perspective as a market maker, because you don't have true momentum indicators. But if you have a true momentum indicator that can tell you whether buyers or sellers, whether there's too much supply or demand, then you would know coming into this whether sellers are going to sell it or not. This was decided over here, not over here. Okay? You found out about it here. The market makers knew about it. It wasn't a surprise to the market makers. Ken says, I'm used to you holding out, and it is worth to wait every time. Now, Ken, on a scale of 1 to 10, what I just explained, how cool is it? For somebody who actually understands math and understands momentum, 15. So you've also learned that you don't need price to move to determine momentum. Price doesn't have to move for you to determine momentum. So price doesn't have to move for you to determine momentum, and you can use momentum to determine where the market's going to go. Those are two things you didn't know till today. And you also learned that a oscillator is no good, because it has divergence, and you can't have momentum and divergence in the same indicator because it'll mess it up. Has anyone ever taught you this before? So at least you understand where we're going, and now you understand what the problem is. Okay. So all momentum squeeze indicators are no good. No, Jeff, please don't do that to yourself. Yes, momentum and divergence are contradictory concepts, but for some reason every oscillator has divergence in it. And Ken will tell you that is true. That is true. Krisha says your experience is exemplary. Now, if somebody gave me a lesson like this 31 years ago, I would fly out to them and kiss them on their lips, because I just taught you guys a whole lot of stuff. A whole lot of stuff. Good, Andy. I'm glad to hear that. Now, you all need to rewind this video, and you need to watch it for a good hour, because I just gave you an hour of premium discussion for absolutely nothing. Whether this was going to be marked down was not decided here. It was decided here. What they did to decide whether it was going down was use momentum. Momentum is not something you could see by price, and it's not something you can see by oscillator, because oscillators have divergence, and divergence mess up momentum. Just gave it to you all in a complete bow package. And here's the interesting thing. Anybody who's a professional trader could not impeach what I just said. It's a fact, and it's based on complete facts. It's unimpeachable. Take a look at any oscillator. It will have divergence in it. Not higher highs, higher lows, higher closings or lower closings in comparison. See, let's say price goes from 20 to 19, 20 to 19, 20 to 19, 20 to 19, and you look at the chart. You can't tell. You can't tell anything. It's just going sideways. But if you're looking at a real momentum oscillator, you can tell. ADX has nothing to do with this. No, folks, tools that were created 50 years ago are not going to help you do this. That I could guarantee you. Yeah, you need two to eat a soup. Exactly. Did you guys get value out of this? Was this a cool session or what? Oh, Matt knew where we were going because he's been working on the on this tool. He knew where we were going towards the end. All right. Mark, I just explained to you, stop looking at the size of the wicks. It's going to happen really soon. We're beta testing it right now in ourselves. It's brand new. It's brand new. Brand new. All right. And yes, everybody's going to want it. And it's going to be used in 3 different time frames and intraday. So we will always be able to measure momentum on any asset we trade, whether price is going up, down, or more importantly, not going anywhere. Don't you want to know which way momentum's heading when price is not moving? No, Michael, it's not going to take a lot of watching. They're going to be color coded. Green and red. Green is going to be momentum is getting improving. Red's going to be momentum is declining. David, they communicate by not looking at these silly tools that most of you guys look at. Yes, you can make a lot of money by knowing that. I would say it's just about as powerful as relative strength when you use it the right way. When you use it the right way. It's not part of the dashboard. Dashboard looks at relative strength. This is momentum. This is momentum. But I've taught you so much right now in the last hour, including exactly how the indicator works, what it doesn't use. Like if you're a mathematician like Ken, you probably have a pretty good idea of where I'm going with this. If you're a mathematician. Like I said, it only took me 31 years to figure it out. All right. Thank you so much. If anybody says this class sucked, then you obviously did not get it. Well, Omar, didn't you say momentum? You were right. You said momentum. Folks, a few things. Momentum and price movement have nothing to do with one another. No, 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 no. They don't. No. The guy who told you that it does, he lied to you. And the people who told you that price breakdowns are known right here, well, they lied to you too. That market maker knew he was marking down the price. Trust me, they know during the Macy's Christmas sale what clothes are going to be marked down by the rate of consumption. Rate of consumption has nothing to do with price movement. Separate momentum and price and cut divergence away from there. Divergence is bad. All right? Man, I just give you, not lied. They were as ignorant as I'm about it. Roger, giving you real truism. I'm giving you guys some real stuff here. If you can predict the direction of breakout with momentum, this is a huge. Jack, you mean the kind of edge that gives me like 94% win rate in the pit? You mean that kind of edge? Yeah, I've been using it. I've been using it for my pit trades for the last couple of months now. All right, guys. Thank you so much. Have a nice day. We'll see you later. Please rewind this video and watch it at least 20 times. Because again, it took me 31 years to figure this out. Hopefully it won't take you as long. No recommendations for anything, Nestor. I think I gave you enough to chew through enough for today. We'll go through all the stocks for tomorrow. I'll post them in the Telegram channel for you guys right now. All right? Where can you find the video? Matt will post it for you here, and he'll post it for you on YouTube. Let me go to YouTube and see if people enjoyed this session real quick. Go to YouTube real quick here. YouTube. Let's see. Let's see if people on YouTube enjoyed this here.
You're talking about post the YouTube link, right?
Yes.
Well, I wouldn't post the YouTube link on YouTube.
No, not on YouTube. Here it is, live. Let's see. 95 people here. Awesome. Thank you. Just booked my ticket. Amazing. They did, not you. Why did you spot the small candle? Threw me off by peeps. Can you show example? All right. So everybody now understands. Everybody's good now. All right, guys. Thank you so much. Here's the link. If you want to see this again, here's the link. Now, this is the first time I'm talking about this. I'll be talking about this obsessively over the next couple of weeks. I just wanted to give you a little tease and give you a nice little lesson and kind of open up your eyes to this world and just to confuse you a little more just when you're thinking you got an edge on the trading whole thing. Just throw a couple of wrenches at you. Bye, guys. Take care. Have a great day. Wasn't it a good session, Matt?
That was a great one.
All right. Bye, guys. I thought
Bye,
it was
everyone.
a great session. Bye, guys. Cheers.